Welcome back to Primary Source China Investment. We're on show Y2. And this week, we're going to take a closer look at what's driving the China economy from an import and export, and then trickle that down into the equity market. Because as we've seen, there's been a ton of dislocation in China equities this week. So we're going to start not in China, not in the US, but with Russia and a British football team. The word unprecedented is thrown around a lot these days, but what's happening with respect to the Russian economy is unique in time. The derivative effects of sanctions can be seen with Chelsea, the football club. This is owned by one of the 7 oligarchs whose British assets were frozen this week. So what does that mean? The team can't sign players, they can't sell tickets or gear. Even the hotel owned by the group stopped taking reservations. Chelsea's owner has been rumored to be trying to sell or is trying to sell the asset. So what's happened now is there's no off-ramp for these kind of assets and these kind of people. A similar thing is happening with respect to US listed Chinese equities. And we don't want to draw too many parallels, but as we've been discussing in the past, this HFCCA clock is ticking for China-based firms listed in the US to comply with audits. And this week, our favorite punching bag, KWEB, remember, China-based US-listed tech companies, which we've been advocating against since we basically launched this show, sold off an additional 18% this week. Interesting note about KWEB, a year ago, 75% of the names in that fund were US listed. Now, only about a third are US listed, and the rest are Hong Kong listed. And in the last year, Alibaba, Jingdong, Baidu, Bilibili, Trip.com, Weibo, Neo, all have taken steps to dual list in Hong Kong. Just this week, DIDI got word from the Hong Kong regulators that there's a concern with the data at the firm, so they can't list in Hong Kong. So DIDI now, and DIDI is undeniably a real company with real customers and a real service, DIDI has no place to list. So there may be a lot of value in that equity, but right now we can't see. So before we get into this twist in the show, which is where things are happening in China and sort of safe spaces, I wanted to throw this to Peng Guo and get his thoughts about what happened this week.
This week is a huge volatility. So after you wake up, you really don't know what's going on with each asset class. It could be get sold, it could be pumped, like the KWEB, something like that. It's really, I think, totally by luck or by the news driven.
Yeah.
So after that, I hope the market should get back to the normal value or to the normal behavior. So I think that is a huge risk, and a lot of I bet Chelsea and his fans never ever thought of such kind of risk.
Yeah.
In their life. So they have no way to avoid it, plan it, or until something really happens. So that's really sad. So I think right now the entire global suffered the butterfly effect from the war. So that's everybody, like even the individuals, suffer the high inflation. Like the country levels, it depends. So some of them even like the suffer not getting enough food. So that's a huge problem in the Europe and the Middle East, some of the countries. So I really feel sorry for the tragedies in this war. So I bet the political people or whatever, they definitely should reach some agreement to solve the problem as soon as possible. Otherwise, nobody knows what's going on with the economy and what's going on with each asset class.
Yeah. I feel like you and I should take a little bit of a victory lap, though. I mean, you and I have been saying a lot of the same thing for a long time with respect to a lot of these names listed in the US. And, we'll circle it back to China here. And we've always been saying, like, the place to invest in China is the A shares. And, a lot of these high-flying stocks are simply that, high-flying. Some of them have great business models. Some of them are truly innovative. But the risk factor is just way too high.
That's exactly right. This is why it is really proof our index works. It's just as long as it's not in the uptrend, you don't know what happened. Just stay away and wait for the next round. So that is the best investment strategy. So we talk this one many times. Nobody really knows until to see this is like the exactly.
Yeah. So practically speaking, what are the industries, sectors, and companies that matter to China? Because there's a lot of policy discussion going on, and we're going to put a list up, and maybe we can just talk over it. But the 10 biggest industries by revenue in China. This is what are big operating entities in China doing business. There's mining, there's construction, there's shopping, there's more construction, there's tunnel and subway, and there's some software and steel and engineering. These are the areas that may not be so sexy, but these are the areas that are going to provide good, strong, long-term, maybe even boring growth. And interesting, most of these companies are large SOEs. They are deeply protected. They are also listed on the mainland as A shares.
Only the good company and top company, they are qualified to go listed in the United States. I think right now it's like the investment from the investment behavior theory due to the regulation risk. That's the cause of the huge mess in those companies. All the active model you guys said before, based on whatever historical data, is useless at all. So I think right now it really depends how to solve the problem. On the other side is the versus scenario. Those companies cannot be delisted. They become the private company. So private company always suffer like the liquidity discount. So you just put this discount in the valuation, and then you should get a certain reasonable valuation on that. I didn't calculate it with those companies, but they should be durable, even including for the entire sectors. That should be the bottom line for this drop.
Right. I would just say for high net worth individual, institution, pension fund, endowment, there's just no way to be playing this game. Most of these people that we just met they're just buy and hold. And if you're going to buy and hold and you want exposure to China, trying to play this trading game or this valuation game is very, very tough because there's so many exogenous events. I mean, the fact that DIDI can't list in Hong Kong, I mean, that surprised everybody. That's why the stock sold off 40%. So, if we just switch it back to those companies that are the biggest companies in China, I mean, remember, a lot of these names don't hit the radar in China in terms of either revenue or profits. I mean, here's a picture of all of the top revenue generating companies in China. They are big, boring, state-owned companies. We're talking petroleum companies, insurance companies, banks, railroad companies. These are the kind of companies that have the biggest revenues. And if I put it up by profit, it's the same thing. The most profitable company in China is ICBC, one of the largest banks with hundreds of thousands of branches. Again, Bank of China. Alibaba is up there as well, but so is China Mobile, Huawei, Jindong is up there. So, what are these big China-based domestic companies that are big and growing, albeit slower than some of these high flyers? But if you want exposure, this is probably where to be, particularly because we know growth is slowing in China.
That's right. So I think China has really definitely slowed down in the past of years, and also they are adjusted the economic structures. That's a huge of the change as well as the policy change recently. So nobody is really know what's going on,
except the fixed income people.
Fixed income people is a relative state. But high inflation as well as that definitely make them as a loser in the past couple of years. They just you can sell those equities, just hold the cash for to wait the market calm down.
Yeah, it does look like there is some real split between the risk factor of alpha and beta, particularly with respect to China, because a lot of these tech companies, they had unbelievable returns. I mean, massive outperformance. And, the sort of beta play in China was really a sucker's bet. And it does seem like that's flipped a little bit because, volatility is a two-way street.
Yeah, on the extreme market, I think most of the time might be good opportunities to get the investment return. So like the K-Web right now, everyone knows is caused by regulation risk, but that is durable. Think about the Apple, Tesla, right? All those companies as a foreign owned, they all collect the tons of the sensitive Chinese people's data. But they can reach some agreement to solve this problem. Why DIDI cannot do that? So it's obviously, those kind of the problem is solvable or durable things. I think right now, as long as you see DIDI tomorrow, they reach some new agreement or find a solution, it's going to be a pump up like another 40% over the night. So that's on the other side of the drop. So we really need to keep eyes to see the true value on those companies.
You mentioned earlier before we got on the show, the education sector. I mean, that basically those public companies, they're gone. So I don't know if that happens to DIDI, but those are definitely headline risks, and I wouldn't recommend taking those risks. You can have as much fun at a casino. Those are the kind of risk. I'm not saying that DIDI's not a real company. It is, but the regulatory risk is just so high.
Yeah, like you said, so pretty much if you want to get the China exposure, you cannot just without the thinking or without an investment strategy or do some research, just buy some of the things and try to make the money. So that doesn't work at all. So that means you have to do something, or at least find the people, find the good indices, like we created the uptrend indices to as kind of the reference. Otherwise, if market risk come, nobody knows which day, what time they will come, and that's have to suffer the loss. Another way,
that's why I said we should take a victory lap. I mean, if you shorted K-Web and you bought ASHR when primary source China investment told you to do that, you'd be up a ton of dough right now. So
exactly,
we should take a victory lap. And with that, we're going to leave it here, Peng Guo. It's great to catch up. And what we'll do is we'll put this out there. Hope everybody is subscribing, and we'll see you next week.
Thank you.